when I do it. Fuck 'em. Fuck.
Hey Rich Talk, today's finance word of the day, credit score. A credit score is essentially your Kelley Blue Book rating, Yelp review, Uber score of you as a person. But instead of conveying your miles per gallon, how likely you are to give somebody food poisoning, or how likely you are to puke in the back of a car, it tells lenders how likely you are to repay your debt. Scores range from 300 to 850 with these breakouts. Having a higher score will allow you to access the best rates when borrowing money, and having too low of a credit score may mean you pay high fees or can't get a loan at all. The national average is 711 and is affected by these metrics. So, if you want to raise your credit score, avoid taking out too many new loans, limit your spending on your credit card, and make sure to pay your bills on time.
Hey, I'm calling because I don't use my credit card that much anymore, and I'd like to cancel it. Sure thing. No. I have a rich BFF, and she taught me that canceling my oldest credit card would shorten my credit history and lower my credit score. Instead, I want to downgrade my card. Okay, what would you like to downgrade to? Instead of a Chase Sapphire Reserve, which has a $550 annual fee, I want to downgrade to a Chase Freedom, which is also a great card, but it has no annual fee. Wow, you sure know your stuff. I'm Vivian, your rich BFF. I'm a 28-year-old millionaire, and I even worked as a trader on Wall Street, but nobody gave me this advice when I was 23, and I really could have used it. You've tried everything to get your credit score up, but you just can't seem to get it higher. I'm Vivian, your rich BFF, and your favorite Wall Street girlie who's gonna let you in on the secret that the financial industry does not want you to know. A lot of us pay rent every single month, and if you miss a payment, you better believe your Remy Ratatouille, Stuart Little snitch landlord is going to report it to the credit bureaus and ding your credit score. But you know what happens if you do pay on time every single month? Nothing! Your landlord is not in the business of helping you increase your credit score. You're gonna have to do that yourself. For about $15 a month, you can manually report your on-time rental payments to help increase your credit score. This will help you in the future when you want to buy a car or a home, and these are 3 websites where you can do it.
What's the top 4 or 5 credit cards that everyone should own?
It's really simple because they all work seamlessly together. So there's 2 credit cards with Chase. One is the Chase Freedom Unlimited, which is your everyday spender, and then the Chase Sapphire Preferred card. With the combination of both of those cards, you unlock the Chase Travel Portal, which allows you to move your points into mileage partners or hotel loyalty programs, so then you can travel hack better. So you get those 2 cards, and now you complete your Chase Duo. The other 2 cards are with American Express. So you get the American Express Gold card, so you can earn 4 times points on restaurants and groceries, namely. And then you also get the Platinum card. You want to spend your money on the Amex Gold card in the Chase Freedom Unlimited, but you want to have the Sapphire Preferred in the American Express Platinum so you can get the travel benefits. You unlock the portals for both of them, and you can actually move your points where you want them to go. If you're a traveler, if you travel more than, I would say, once or twice every couple months, then I think you should get that card. Otherwise, you don't need that one, but the other 3 everybody should have.
Yo, to the end, because this information is going to change your life. I'm going to tell you about a credit hack that's going to get your credit score in the 700s. Number 1, you need to go to a bank that you trust and get a secured credit card. For this example, I'm going to use either Capital One or Navy Federal as my banks of choice. Some of these banks allow you to put down as low as $50 on your secured credit card, which is actually going to be your credit line. But here's what you do next. Next, you're going to go to your local grocery store or corner store or whatever the cheapest store you find is, and you're going to make a small purchase, no more than $1. So 50 cents to $1 is the goal. Next, you're going to wait 30 days for that amount that you put on your credit card to report. Now, guys, if you have a $50 secured credit card, the goal is to only put about 50 cents on that so that you have 10% utilization that's reporting on your credit report when it reports. Next, you're going to pay that balance off and repeat every month. Now watch those credit scores soar. Now go ahead and smash that follow button and share with someone else.
To understand how to get a perfect credit score, you have to understand how the credit scoring system works in the first place. Now, the first and largest factor is based on your on-time payment history, and that makes up 35% of your score. This means that you always pay your bills off on time as agreed without ever being late or missing a payment, because if you do, that stays on your report for 7 years, and it has a pretty devastating impact. Now, the good news is that when it comes to paying off your credit card, you only have to make the minimum payment in order to stay current, and most of the time that's only between $25 and $50. So even in the worst case scenario, if you're not able to pay off the full balance, at least make the minimum payment so that way your account stays in good standing. The second largest impact is what's called the amounts owed, and that makes up 30% of your score. This is also what's known as the utilization rate, which calculates how much credit you have available to you versus how much of it you actually use. Now, if you're somebody who maxes out your credit cards or you use almost all of the credit that's available to you, your score is going to go down because you're seen as a riskier borrower. The third, we have the average age of your credit history, and that makes up 15% of your score. Overall, lenders like to see that the longer you've had your accounts open for and in good standing, the more likely you are to be a good borrower. Then fourth, we have the types of credit that you have available, and that makes up another 10% of your score. This means that lenders want you to have the experience of handling multiple types of loans from several credit cards, auto loans, a mortgage, and anything else that'll add on to your credit report. And finally, we have the remaining 10% of your score, which is calculated by the number of hard inquiries you have in your report. See, anytime you go and apply for a new line of credit, that's marked down in your report. Generally, the more marks like this that you have on your report, the lower your score is going to be because lenders see you out there actively trying to get as much credit as possible, and you're seen as a higher risk. Personally, I wouldn't worry about this too much because it'll only impact your score temporarily and it's pretty minor.